Hey everyone, I'm Jeremy Saff and you're watching Kitco Mining. Now today we're looking at how an established mine site can become more than just a historic landmark. It can be revitalized into a key player in the modern gold and silver market. Now Skeena Gold Silver is known for revitalizing historical sites like Eskay Creek and Snip, and it's now taking on a rebrand and doubling down on both gold and silver. Now with solid financial metrics backing their projects and a rapidly changing market, the stakes have never been higher. Joining us to unpack all of this, of course, is Walter Coles. He's the executive chairman of Skeena Gold and Silver. Thanks, man, for making the time.
Oh, my pleasure.
I appreciate this. Let's start with this rebranding. It's Skeena Gold and Silver now. Why now, and what does that look like for the company?
Well, we felt like the name Skeena Resources didn't really explain the tremendous other metal opportunities that exist at Eskay Creek. Eskay Creek's our flagship asset. It's renowned for having produced incredible grades of gold, but also a huge amount of silver. When it operated back in the 1990s into the 2000s, it produced 3.3 million ounces of gold, but an astounding 160 million ounces of silver. Wow. That was an underground mine. We're revitalizing it as an open pit. And the reason we want to change the name is because we want to emphasize how much silver is still there.
Yeah, talk to me a little bit about these brownfield sites, why you focus on them. I mean, you've been so good, and you got Snip too, so I want to kind of get into this of revitalization, kind of bringing back these properties and making them magical again.
Yeah, well, I mean, the truth is that exploration is really hard.
Yeah.
And so I was trying to figure out what's a strategy where we could mitigate risk and increase our odds of success. And there's a saying the old timers have, like, the best place to find a mine is in the shadow of a headframe. And so that was our idea, is like, go try to acquire past producing mines that have been shut down and sort of a trough point in the commodity cycle, with the hope that there would still be a lot of metals left there in these legacy assets.
Well, let's talk about that. I mean, feasibility study, pretty impressive. And you just did a raise. Capital's come quite easy in this crazy market where it's difficult for anyone to raise any capital. Let's first talk about the feasibility, break down the project, what you're excited about.
Yeah, well, it's an open pit now instead of an underground. So open pits are just less complicated, lower risk, in my opinion. It's going to be a lot bigger than the previous operation because underground mines, by nature, just are smaller. We're going to produce about 270,000 ounces of gold a year. And in the first 5 years, we'll produce almost 10 million ounces of silver per year. And the other really important aspect is we're really low on the cost curve. Mm-hmm. So we're around $700 US per ounce gold equivalent on our production cost. So this is going to be a big cash printing money machine.
It's huge. I mean, talk to me about cash flow. I mean, it's becoming, at these levels, as we see the price of gold reading all-time highs. Yep. I think we had 30% in the last 6 months on silver too. What do those margins look like? What does this cash flow look like?
Oh, it's tremendous. So the capex in our feasibility study, the estimate was about 715 million Canadian dollars. At spot prices, we will generate that amount of after-tax cash flow in about 8 months. So the forecast cash flow generation after tax in the first 5 years is over $700 million Canadian per year. And so you put that in the context of our current market cap, which I think it's around 1.1 or 1.2 billion Canadian. Yeah. So, if you look at our after cash flow, or our cash flow as a yield, as a percentage of the market cap, what is that? That's that's over 50% a year in free cash flow generation versus our current market cap. So it's a cash printing machine.
It is. It's absolutely fascinating to watch. And obviously, your stock price has been doing really well. I think it's doubled over the summer, which has not been easy for anyone else in this market. Talk to me about investors coming to Skeena. What are they seeing? What are the comments? I mean, you're seeing fresh blood come into the market.
Yeah, I am. And my hope is that this is the beginning of another meaningful rally. Bull market in the commodity equities, because clearly the commodity prices have already moved, and all of us are looking at each other and going, when are the stocks going to move? And I think the commodity price move certainly contributed to the improvement in Skeena's share price over the last few months, but most importantly for us is we're now a fully funded project. And until we had that funding in place, I think there was an overhang on the stock. I think investors were waiting because they didn't want to get in front of a large equity raise that might have been coming. And now that overhang is removed, it sort of unleashed the value there.
The beast.
Yeah.
It's out. Okay, well, let's talk about that. $750 million in June. not an easy feat. How was that process for you? I mean, I know it looked easy when we see the news release, but you did well there. Yes,
we were very happy with the outcome. It was the first time I've ever done a project financing of that nature and size. So certainly we were pioneering new grounds for ourselves, but we were able to create a competitive process where we had 3 or 4 large entities putting forward proposals to provide financing, and it's amazing what competition will do. Mm-hmm. And that competitive tension led to the outcome.
Okay, we were talking a little bit about this super cycle in commodities. A lot of people are calling for it. I think I had actually had an analyst on the news show just talking about that too. How long is this going to go on? What's your outlook here? I mean, are we just getting started?
That's a tough one. I mean, commodities, one thing you can count on with absolute certainty is that they're cyclical.
Yeah.
Right? But we go through these sort of CapEx cycles where, the price goes way, way down. And as a consequence, companies cut their exploration budgets, they cut their CapEx budgets. And the result, the after effect of that is that the pipeline of future supply starts to dwindle, it starts to shrink. And so we've been in that sort of declining amount of capital available for creating new supply for the last decade. So you would expect that at some point there's a boomerang effect where the commodity prices start to go, which is what we're seeing happen right now. And we all know mines take years and years and years to come online. So even if capital starts rushing back in this space, you're not going to get a supply response for many years. Yeah. Which to me, I take heart. I think as a result, we're going to have a bunch of years ahead of us of very favorable conditions.
Yeah, you're talking about how mining is so cyclical, and it also sprouts up a lot of companies. We know there's a lot of the juniors. We talked about this where some of them way heightened costs on GA, things like that. So when we start to look at the actual mining companies and we start to look at it, you have, it's a pretty crowded space out there in the silver sector, but you've been talking about how Eskay Creek is more of a globally kind of relevant mine right now. Talk to me a little bit about it. I mean, it's pretty unique.
Well, it's a VMS deposit, so it's multi-metallic. It's well known for the gold and the silver, but we also have a significant amount of antimony. It's 28,000 tons of antimony in our concentrate. Antimony is a critical metal. The Chinese just banned the export of antimony. I think they produce 55 or 60% of the world's antimony. So that's a critical metal that we have a lot of at Eskay Creek. We also have zinc, we have lead, and we have copper. Right. So none of those metals were included in our feasibility study. We were kind of rushing to get the feasibility study done with the idea that we would circle back around and do a feasibility study update at some point in the next year. Right. And we'll include the value for all those other products.
Okay, well then that gets me to the point. Obviously, stock's hot. You can use it as currency. We're just entering this M&A cycle. It seems like we're seeing some of the juniors. Anything there?
Well, okay. So first of all, I've had some investors say to me, well, I missed it with Skeena. It's already moved up 100% in the last couple months. Yeah. I wish I'd been there, but I missed it. And my response to them is no, you haven't missed it. Because in our current feasibility study, the after-tax NPV right now is $3.6 billion.
Wow.
Right? And I hate the way mining executives always use like $1,800 gold or $1,900 gold. Like that's ridiculous because the people who are buying Skeena stock or other gold stocks are bullish on the commodity price already, mm-hmm. and they're looking for leverage to that commodity price. So when I talk about our project evaluation, I talk about it in terms of spot. Right. So at spot, the net present value of our project after tax is 3.6 billion Canadian. Mm-hmm. But that does not include our SNP asset. That does not include the waste material in Albino Lake, which we're going to reprocess. Right. It does not include deepening of the pit, which when we did the feasibility study, we used 32-degree pit walls, very shallow. We'll be able to steepen them, make the pit deeper, extend the mine life, bring in more material. And then I do believe we're going to get much better payables from smelters. Right now, there's too much global smelter capacity. Right. So mines are in a great bargaining position to grind those smelter payables higher. Mm-hmm. And then the last thing I mentioned, we have all these metals that weren't accounted for in our feasibility study. So I am hopeful that we can increase our after-tax NPV to north of $5 billion. The other really important aspect and why we rebranded Skeena as a gold and silver company is because the silver company is traded at like 1.4 to 1.8 price to NAV multiples,
Right.
where gold companies are like around 1. So if we get to an after-tax of NPV of like 5 billion, and you do a 1.2 times multiple on top of that for the price to NAV, excuse me, saying a lot, that's like a $6 billion market cap. Our market cap today is just over $1 billion. So that means a 5x potential return in our stock price if we're able to execute.
That's just wild. So are you at these numbers looking at, any takeovers?
Again, our view is our stock is tremendously undervalued.
Yeah, exactly.
So
that makes sense.
Yeah. So we've got we have everything that we need to grow the stock already in our sort of basket of goodies. We just need to unwrap them.
Okay, let's talk about unwrapping it a little bit. Obviously, we got this macro environment too. Costs have went up for miners, but even as we have these, high metal costs, how difficult is that to balance those positives and negatives in this cycle?
Well, an old timer once said to me, he goes, "Good grades make for good miners," and that's what we have at Eskay Creek. In the first 5 years, the gold equivalent open pit grade is 5.5 grams per ton. A typical open pit mine in the world is a gram per ton. When you have that kind of grade, the result is you're going to have very low operating costs. And that means margin of safety, and that means profitability. So yes, of course, costs are really important to us, but we're blessed with a beautiful high-grade deposit.
Yeah, not only that, you're operating in British Columbia, which is a pretty mining-friendly community. Happy being here? I know we have an upcoming election. Seems like things are on good footing.
Look, every jurisdiction has its pluses and minuses.
Yeah, of course.
What British Columbia has is an incredible world-class mineral endowment. Those mountains up in Northwest BC are loaded with gold, silver, copper. BC could be the Saudi Arabia of copper production.
Right.
So what's been holding it back is permitting. The permitting timelines in British Columbia are way too long and complicated. Yeah. We've been working on our environmental assessment for 3 years. Thankfully, we're 3 years through it and only 1 more year to go to get it. But that's just excessive. It's too long. And I'm happy that I'm seeing in the upcoming provincial election that this has become an election issue. And I'm seeing both the NDP and the Conservatives acknowledge that permitting timelines in BC are too long, and one can only hope that they'll actually stop talking about it and do something about it.
Yeah, and to your point, when we look at that macro environment too, we're going into many elections this year, let's call it. Yeah. But when we start to think about, mining, it's almost like the government's waking up finally and realizing China's been ahead of the game. We got to get in here.
Look, it's been such a missed opportunity. Yeah. And now it's getting to the point where, strategically speaking, it can't be ignored anymore. So again, I'm hopeful that the government will truly do more than just talk and improve these permitting timelines, because it's critical metals and critically important to the economies of the Western democracies that we fix this situation.
Yeah. Have you been having any discussions? I find it very interesting on that, rare earth type play that China has been so ahead, and they're worried about it.
Look, I can tell you, just in our situation, the Chinese have been all over us to try to get our concentrate supply. Right. We get constant outreach from smelters in China, and we're starting to get more interaction with, let's say, the U.S. Department of Defense. So there's a waking up and the start of a growing understanding of the things that we need to do to improve the production of critical metals in the West.
Yeah, we're so behind. We're so underinvested in the sector.
And this province, British Columbia, can play an important role in fixing that.
Yeah, well said. Okay, well, looking ahead, obviously, over the next couple of quarters, what are you most excited about for shareholders to see, say, in the next year?
Yeah, I hate to say, come back to the same thing again. It's all about permits.
Yeah, of course.
So we're expecting to get our permits in 2025. And that will be another major unlocking of shareholder value. We're fully funded, so I like to say we've got because we're a brownfield site, we do have some permits and we have started construction. So we've got a shovel in the ground, we've got the cash in our back pocket, and all we're waiting for is a permit.
A lot of cash in the back pocket.
Yeah.
Okay, I appreciate your time.
Yeah,
thanks, buddy.
Thank you.
Thank you. That was Walter Coles, of course, Executive Chairman of Skeena Gold and Silver here at Kitco Mining. Lots of great content coming up all week long. I'm Jeremy Saffron. We'll see you next time.